far short of Wall Street's expectations as the Elon Musk helmed company reported a 20% drop in revenue, auto revenue specifically. So why the dip? And what does it mean for the future of Tesla? Seth Goldstein, equity strategist at Morningstar, joins us now to discuss. Seth, really grateful for your time here. 20% drop in auto revenue year over year, 16% drop in deliveries year over year. Did Tesla get caught flat-footed this last quarter?
Well, the first quarter was very slow, and when we look at the reasons for that, we think a lot of that came from the switch to the new refreshed Model Y, which was not yet out in many markets through the start of the year. In fact, in the US, it just started to launch in mid-February. China was mid-February, but the full self-driving had not yet been approved, the autonomous driving software, until mid-March. And in Europe, we just saw it begin to roll out in various countries in March. And so when you put that together with also the affordable vehicle not out yet, I think a lot of consumers were simply waiting on the new Model Y or more affordable vehicle before they bought a Tesla this year, and it showed up in the results.
And obviously, one of the big takeaways, at least in terms of headlines, was Elon Musk saying that sooner rather than later plans to somewhat step back from his initiatives with the federal government, spend a little bit more time focusing on Tesla. Was that the announcement that you were expecting? And what are your expectations for how that sort of phase back with more Tesla focus may work?
Well, I view this situation as very similar to when Elon Musk took Twitter private several years ago, where initially after the acquisition closed, he spent a lot of extra time at Twitter, but then eventually took a step back and returned more time to Tesla. I view that as the exact same thing here, but Tesla has a very strong and deep management team. We haven't seen timelines slip. You know, the affordable vehicle still on track for production by the middle of this year. The robotaxi testing in Austin is still on track for June. So those are the two key timelines for new products in 2025, and those have not slipped even as Elon's dedicated more time to being a government advisor. So as he returns to spend more time at Tesla, I expect that his focus will be on driving the robotaxi service. He aims to turn that from a product concept and testing into an actual revenue generating product by next year. So I think that'll be his focus. But I think while he was gone, clearly we didn't see Tesla's timeline slip, so I don't think there was much risk to Tesla.
Is there any reason to doubt the credibility of the company's claims for that timeline for the affordable EV, given reports of delays, or really what has seemed to be a top of mind concern for investors, which is that at times it appears as if, to many, Elon Musk's personal attention may be divided among many places at once?
Yeah. Well, Elon's always had multiple business ventures outside of Tesla or multiple other projects he's working on. I think that's what he likes to do in his free time, and I would expect that to continue. But we've seen Tesla turn into one of the leading EV automakers around the world, even while Elon Musk has maintained other projects. So I would expect that to be the case going forward. I don't see a huge risk here. And what management said yesterday that assured me for the affordable vehicle was that they said they could start production whenever they wanted to. They're waiting till the middle of this year to begin production on the vehicle, start in the US market. So I think that's still going to be the timeline, which was the original timeline when they first announced the vehicle last year.
We are seeing the stock up. You and I, of course, are doing this interview the morning after earnings. We're seeing the stock up almost 7.5%. What do you attribute that pop to, given that the top line revenue numbers were about 2 billion short of expectations, earnings per share down to 27 cents. That's well below the street's estimates. Is the post reaction part of the broader market rally today, or do you kind of pin that to some sense that we at least investors heard what they wanted to hear from Elon Musk a little bit?
I think there's multiple factors going into today's rally. First is the broader market rally with hopes that the tariffs on China will be eased, that we won't see a complete breakdown of global supply chains, and that Donald Trump plans to retain current Fed President Jay Powell. I think that's going to help alleviate some broader market concerns. When we look at Tesla specifically, though, keeping the affordable vehicle on track. Remember, we saw the stock down to start the week with the news report out there that the affordable vehicle would be delayed. We also saw Elon Musk returning to Tesla, spending less time in the government. I think that alleviated some market and investor concerns that he might get distracted. And then we're seeing the robotaxi timeline for revenue generation was set to next year, I think investors wanted to hear that. It's great for a product to go from concept to testing, but then to have a firm timeline for revenue generation is a key step towards Tesla, realizing some robotaxi revenue and profits that Elon Musk has been talking about for years now.
How much long-term brand or reputational damage has the political activism side of Elon Musk's personal story kind of wreaked havoc or caused on Tesla? And are there certain strategies you think the company can better employ now to sort of rebuild any of that lost consumer trust?
Well, anytime you have a CEO or a leader of a company making political statements, you do risk brand damage, especially when you're selling products to consumers. But what we look for is we look at the macro data, look at deliveries data, and to say, is this causing actual political damage, or is it just creating extra political risk? The data so far shows that we don't see much political damage from Elon Musk's activities, either being a government advisor or campaigning for a political party in the German elections that took place earlier this year. We do see extra risk though. But so far, when you look at deliveries throughout the year in the US, January deliveries were down, but then as that new Model Y model came out, we saw deliveries up in March, or February, deliveries up again in March. And as the affordable vehicles launched, we expect growth in the second half of the year. So that tells me that while there's increased risk, we're not yet seeing brand damage to Tesla.
Tesla for a long time, Seth, as you know, they've had pricing advantages, they've had volume advantages. That's being chipped away at, most specifically by BYD. And I wonder what you see there in terms of emerging competitive threats, not necessarily for the US market, but for some key markets abroad.
Yeah, so right now in China, there's an intense competition among EV makers where every EV maker has to produce a long range vehicle at a set price point, and there's a price war going on. They also have to include an autonomous driving level 2 software with the product, or many consumers will not even consider a new vehicle. So for Tesla, the key catalyst that helped them boost sales in the second half of March was getting their full self-driving software approved by the government for use, so that could keep pace with a BYD and some of the other rivals in China. And that's going to be a key market for them going forward. Now, BYD sells in all aspects of the market, all segments from affordable vehicle to luxury. Historically, Tesla's just sold vehicles in the luxury market. And so we've seen BYD grow and overtake Tesla with market share because they're selling in all market segments. But for Tesla, I think it's incumbent upon them to continue to refresh their models, make new vehicles, and improve their software over time if they want to maintain their market share.
Seth, I'm about out of time. Quickly, how realistic is the 2026 robotaxi volume production goals and that timeline that's been announced?
Well, we do think that the software will not be ready quite yet for 2026. We think it'll be out by 2028. So if you're looking at a long term, we're still very optimistic on the robotaxi product, but we think that the timeline of 2026 generating revenue and profits might be slightly aggressive.
All right, Seth Goldstein is an equity strategist at Morningstar. Really grateful for the breakdown the morning after a closely watched earnings call from Tesla and Elon Musk. Seth, thank you.
Thanks for having me.